Prediction markets, known in some parts of Canada as forecast contracts or even betting markets, allow investors to trade directly on the outcomes of events that impact markets, including economic data releases, political decisions, and climate trends. The supposed draw of predictive markets is that they cater to the growing demand for predictive tools that help investors manage risk in a global environment. But what differentiates this type of investing from placing a bet on the outcome of a hockey game? Joining us now to discuss this further is Brendan Caldwell, director at Caldwell Securities Ltd. Brendan, welcome back.
Thank you, Theresa. This will be an interesting one.
Now, prediction markets have gained popularity in recent years, especially after high-profile events like the U.S. presidential election. Now, how do these markets differ from traditional investing in stocks or bonds?
Well, the difference between traditional investing is with traditional investing, you are deploying your capital to help some economic activity occur, whether you're buying government bonds and so helping fund the government, or you're buying shares in a company and so are helping that company to, in its effort to raise capital, to deploy, to employ people. So when you're investing, by and large, whether you're doing it directly in bonds or stocks, you're doing something that has hopefully a productive economic outcome, or at least is intended to. With prediction markets or most other sorts of binary outcomes, you are at best hedging your position. So it's in a way like a future or an option, which you can buy on commodities or on stocks or indices. You're betting on something that is a zero-sum game. See, with traditional investing, you can buy a stock, sell it. The person you sold it to could see that price go higher, the company continue to grow. Wealth is actually created. But with an option or most other derivatives, or with a predictive market, there's a winner and there's a loser, and probably a little bit of a spread that the house collects in between. So you're not actually adding to the growth of the economy. What you might be at best doing is hedging your position, that if you're expecting a negative outcome, if a certain party wins an election, or if the climate warms, or if something else happens, you're able to compensate for how that would affect you. And maybe somebody else feels differently on the other side, so that you're both in a way buying insurance. That's probably the most useful outcome from these kind of predictive markets.
And as prediction markets grow, critics argue that they blur the lines between investing and gambling. Does this form of betting benefit or harm how people invest their money?
Perhaps it's a bit of a blurred line, except I'll give you a way of thinking about it differently. With sports betting, anybody to whom the outcome actually matters in an economic sense is not allowed to bet on the game. So if you're playing the game, you can't bet on the game. And there are fairly stiff penalties for those that do. So when you're sports betting, the only people that can bet on this are people for whom there is no vested interest. It's just, I suppose, entertainment, but it's entertainment that is highly addictive. At least with prediction markets, what you're hopefully doing, as I suggested a minute ago, is that you are potentially trying to hedge your position. That if you think that there will be an election results, the most common one, I guess, to think of, that will be bad for you if it happens, then you can, bet. You can bet on that happening, and if you win, you've hedged your position. So there is a possibility that those that are using prediction markets can have a vested interest in the outcome. Now, this creates, of course, its own problem if you think about elections specifically, because the reason that people who have a vested interest in the outcome of a particular hockey game, baseball game, whatever, aren't allowed to bet on it is because they might do things to change the outcome. The same could be true of a lot of other activities in life, like elections, that If people had a financial interest in one outcome or the other, they might do things to cause that outcome, which at a national level, far more important than a sports game, might be well, how would they say, kind of a big deal.
Concerns have been raised about their impact on long term investors. What risks do prediction markets pose to individuals saving for retirement or long term financial goals?
Well, I think for most people, if your retirement goal is going to be met only by literally making a bet on something, whether it's a sports game or who the next Prime Minister of Canada is going to be, then that's going to be problematic. Again, when you're investing versus betting or using these predictive markets, if you want to dial it down from being just a straight up bet, when you're investing, you are actually putting your money in the economic growth of a nation or a region. Whether you're buying government bonds or corporate stocks, you are betting's the wrong word, you are investing in an outcome where you see that company, that nation actually get better. With a prediction market, if you want to take the Canadian election, and you think it's going to be disastrous for us if one or the other of the candidates wins, then you might take a bet on that candidate that if they win, you're hedging your outcome. But it's not a recipe for saving for retirement, because the odds of making enough 50-50 bets in a row that's going to pay off for you, well, it's 2 to the power of how many bets you do, and it doesn't take very long, even to the power of 2, to make the odds vanishingly small if you're getting them all right.
And how do prediction markets affect the broader economy? And could their rise lead to more volatility in financial markets?
Yeah, well, to the extent they're used to hedge volatility, they could potentially reduce it or reduce negative outcomes. The way options or futures have, when used well, can reduce negative outcomes if they're being used to hedge. But of course, any idea taken to its illogical conclusion can go from being a helpful to a deleterious thing. Like take wine with dinner. It's a wonderful complement, but a dangerous substitute. So too, options absent any underlying interest in the outcome, just as a speculation, are they can be used wonderfully well if you're long a particular stock and you write options contracts in order to add income, or if you are on the other side of that, trade and buying options contracts because you want to buy a stock at a certain price, or in the event of certain outcomes, then great. But just as a bet on whether something good or bad will happen, it takes an awful lot of those. With the spread that's built into options, or indeed to predictive markets, or any sort of binary outcome, generally speaking, the house does better, which is why options exchanges already, companies like the Chicago Board Options Exchange, the CBOE, or futures markets like the Chicago Mercantile Exchange, have done so very, very well. The house always wins.
And are there regulatory concerns surrounding prediction markets, especially with the overlap between gambling laws and financial trading regulations?
Well, so far, they've been 2 separate entities. And as you know, and I think you and I have talked about, the rise of gambling has been it's always been a thing, but everything that used to be illegal, the government now runs, from alcohol to marijuana to gambling. So I think that to the extent people are betting on this or betting on anything as a way of achieving a financial end, unless they're using it to hedge, as I described earlier, I think they're in a lot of danger of having issues. I don't think the government's going to run in to curtail betting, other than having a little tiny fine print 8-point disclaimer at the bottom of the casino Niagara ads to rein in gambling. That watch how much you bet. Know your limit and stay within it. Yeah, that's going to really help a compulsive gambler. So No, I don't think that regulatory curtailment's going to be anytime soon in coming, either in financial markets or in the broader area of sports and other gambling.
Brendan, thank you so much for the time today.
Thank you, Theresa.